Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, as we look forward to this 3-day weekend celebrating the Memorial Day holiday, the markets will be closed on Monday, and that means next week we will have a shortened trading week. Now, usually when that happens, we tend to get a little bit more volatility than usual because the active traders and a lot of the fund managers try to squeeze all their activity in a shortened trading week. So instead of trading 5 days, they're trading 4. So we'll usually see increases in volume, maybe some manipulation of some of the cheaper stocks. But overall, if you look at this chart, you'll see that I left my lines on these candles from last week, so you can see how accurate this report is and how it's been very accurate. So last week, right here, I said the market will most likely move up, and I highlighted the higher low and the higher high here. If you go back and listen to that recording, I said that is what defines a pivot point. Shortly after that, on Monday, we gapped up, and look at that. We hit my horizontal flatline resistance right here and pulled back on Tuesday. Wednesday, we had a spinning top. Thursday, another spinning top. Today, a doji, and we are pulling back now. Now, again, the end of the line right there, as I magnify that for you, was my target. So, again, 100% accuracy to the penny. And now, let's analyze this. So I'm going to leave these lines on here because one of the first things I see is a drop in volume as the price was going up. And that signals that the buyers are starting to lose some momentum. You'll notice down here, the stochastics showing extremely overbought on the scale from 0 to 100. It's up here close to the top. And I think we'll see a pullback in stochastics next week. And one of the most significant indicators that I use, and hopefully you're following this as well, is the CCI. Right here on Thursday, we crossed below the red line, which is the sell signal, and now we're heading lower. So the CCI is most likely going to continue lower as the price action moves lower. And what I think we could see is a possible fill of this gap. I'm going to erase this line down here, but I'm going to leave this horizontal line as a support level because 80% of the time gaps fill. And then after they fill, we tend to get a bounce after that. But I'm going to leave that as my target, just like that. If you're interested in learning more about gap rules, just go to themarketguys.com, and on the video page, we have a video that talks about gaps, and you can learn about that. Now, if we look at a more broad-based index, that's the Russell 2000, we got the same story pretty much. The market moved up to my resistance point, hit my target. In fact, today's low was just a hair over that target. Again, right there as I magnify, that was my target from last week. Same story, gapped up, same thing. I'm going to erase this right here. Our new resistance is going to be this high at the top. But as you can see, the stochastics and the CCI are overbought, and the CCI is crossing with a sell signal. So I think the Russell 2000 could drop just like that, with the end of the line being my target. And what I think the Russell 2000 will do is more or less gravitate back towards the 20-period moving average, which is this blue line. So that's the Russell 2000. We'll look at the spiders. Ticker symbol SPY. Same story repeats. 100% accuracy, hit all targets. Same thing. I'm just going to duplicate this. I'll erase this line because we have a new high right here from Wednesday. And so that's going to be our resistance high. I think the spiders will pull back just like that to fill this gap. I'll zoom in just a little bit more so you can see. My gap fill support level is going to be here. And I'm going to erase this secondary support level. Now, last week I said that we're basically in a range-bound market. And what that means is we're hitting resistance and pulling back, and we're bouncing off the support. So active traders and particularly option traders are having a field day out there. You might want to learn, at least learn about how to trade options, because we have lots of premium out there. You're able to leverage even the high-priced stocks. And the S&P looks like it could pull back. And for the option traders, you could take short positions and make money on the way down by buying puts. One of the other things that I'm pointing out here is the drop in volume. On the way up, that's bearish. Stochastics overbought, CCI crossing with a sell signal. So the spiders are looking pretty bearish. Now, inversely related to the SPY is what? The VIX. Now, interestingly enough, we have more or less a conflict here. I think the SPY is going to drop, but look here. The VIX is showing a bearish engulfing pattern. Didn't quite go all the way down to my support level. The only one that didn't hit my target, really. But I do think the VIX could drop just a little bit before rallying. And I think that's exactly what we'll see in that shortened trading week next week. One of the things that really conflicts with this bearish engulfing pattern is the fact that the CCI is moving up. Isn't that interesting? Got a bearish signal on the candle, but we got a bullish sign on the CCI. So it's going to be interesting to see how the VIX plays out next week. All right, so that's the VIX. Now, the only one that we have left are the Qs, basically the tech sector. Same story again. We hit the gap fill point right there. Look at that. Going to erase this line. We hit that target, but we hit the gap fill point. So that gap has now filled. Like I said, 80% of the time gaps fill, but the second half of that rule is 80% of the time after gaps fill, the markets tend to reverse. So I think the Qs could drop right back down to guess where? To a gap below the market. See that? So I think that could be our support level. Again, this will act more or less as a secondary support level. I'll remove that to clean up the chart. And same story. As we're moving up, we have a bearish engulfing pattern from Thursday. The stochastics are overbought, CCI overbought and crossing with a sell signal. And that is the end of the story. Hope you have a great long weekend with your family. Enjoy it, and we will talk to you next week. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.